Hello, friends. Good morning. Sorry for not being on weekly on the line because I had some urgent work and I had to go to out of town. And to start with, just a disclaimer that whatever I explain over here is only for the educational purpose. So please do your own research before you do investment. Now, today's topic is very important, and one of this topic was asked to me by one of the followers on the Twitter about then how to go with the stop loss. So I could have easily responded by writing few lines on it, but then I thought that it's a very important topic that should be covered on the video and it should be explained with the help of the practical examples which can help you all to analyze and take a decision that how to put stop loss. Now, stop loss basically depends upon your trading personality. There is no fixed way of putting any specific stop losses on a particular trade. So let us discuss few of the ways that are very popular in the market that are generally used for using stop losses. Now consider that first let us understand why people use stop losses. Stop loss basically means that a specific rate at which you want to cut your losses. Now why do we put that? Because we have a human being always have a limited capital, and to save those capital from a bigger losses, we put a stop loss so that we retain our capital and can trade in the next possible stock or a setup. So let us understand that what are we going to do now. Basically the first most important one or the most widely used are something known as 1:1, 2:1, 3:1, and so on. What does that mean? It means that consider that you are putting a stop loss of say 5 rupees. So if you are trading with the risk to reward ratio of 1:1, then 5 rupees for stop loss and 5 rupees to target. Okay. Now, if you are trading with the mindset of 2:1, that means if you're keeping a stop loss of 5 rupees, then your target is 10 rupees. 3:1 is if your stop loss is 5 rupees, then your target is 15 rupees. So this is 3:1, 2:1, 1:1, and keep on increasing depending upon your trading style. Now, uh, consider that let us understand that if you've taken a trade and mm, yeah, here is the long position. Consider that you are entering at this position, correct? Now, if you're trading with the risk of 69 rupees 30 paise, okay. Now, if you're trading with 3:1 stop loss, so what will happen? Can you see the ratios are changing over here? Now, the risk to reward ratio is 3. That means you are ready to lose 69 rupees for the target of 211 rupees. That is a risk of 3% and a profit of around 9%. Can you see that? So this is how you can calculate your stop losses in such kind of scenario. Now, on the opposite side, you can also do the same way. If you are short over here, sorry, let's keep it short over here, and you're keeping a risk of say around 2.5%, and consider you are doing it 5:1. So what are we going to do? Just drag it down, keep dragging it down till you don't see a ratio of 5 over here. So that means you are losing again 69 rupees. Let making it little bit round figure, or maybe yeah 73 rupees. Then this is 4.5. Let make this 5. Yeah. So at the risk of 73 rupees, you're earning 372 rupees. That is almost 3 times what you are ready to, sorry, 5 times that you were ready to lose. So that means this is how what people calculate that even if you are able to lose 5 trades in a row, you're losing 5x. But if you are getting even one trade right, or say two trade right out of seven, so five losses and two profit, so then also you are at the profit. So this calculation always on the number of permutation, that even if you're losing more and your profits are less, you still end up earning a lot. So if your risk to reward ratio is higher, then the winning trades are required less. If the risk to reward ratio is less, then the number of uh, winning trades has to be high. So higher the winning trades and higher the risk reward ratio, the number of profit making trades are to be less. So this is the concept behind your risk to reward ratio kind of a stop loss. The other stop loss is the trade when you take, consider you are taking a trade over here, then the swing low becomes your stop loss. That means at no matter where you take the trade, the swing lows, consider you have taken a trade over here, the swing low becomes your target, and the previous swing high becomes, sorry, this becomes your stop loss, and the previous swing high becomes your target. So this is known as trading with the help of swings. Now, the other example is, uh, consider you have taken a trade somewhere here, correct? You have take you, this is your entry and this is your stop loss. So where is your target? Your target can be here, this swing high or this small swing high, which has been achieved both the times, correct? So this is one way of taking a stop loss. The other way is a lot of people use EMAs. Now let us check EMA. Now consider I take EMA, and by default this shows me 9. Let me turn to 50. Now this is 50 EMA. Now what happens? A lot of traders take the entry at the bounce of 50 EMA, and when, consider you have taken a trade over here and you exit when the trade is closed before below 50 EMA. Now the chances out here is when there are small swings, when the market is not in the directional, or the trade is not in a direction, a one side direction. What happens, there are a lot of chances that even if you are gaining profits, by the time the stock comes back to 50 EMA, there are chances that you will exit at cost to cost or with a minor losses. Now, to be in profit of such a trade, you need to be in such kind of swing. Now, consider here, if you have entered your trade somewhere here of around 2170, you would have exit over here. That is closing below 50 EMS 2473. Just a second, my. So some people do the 50 EMA as their stop loss. Some go for 100 who are long term traders, and some even majority of the time the most famous one is 200 EMA, where if you can see a person getting invested at 11950 and exiting near around 2600. So this is but little bit a long term EMA. The people who are very aggressive, they keep it as 20. So what happens, you get early entries and early exits. Okay. Now see, if you have would have entered at some place around 2130, your exit would have been approximate around 2600. So the faster you want to trade, the time frame of your EMA is smaller. The slower and long term you want to trade, the number of the trade is high. So it all depends upon what kind of an investor you are. The other way of taking a trade or stop loss is, I'll just remove everything. People generally do it on trend lines. Now consider we are taking this as a daily time frame, and this is our trend line. So what happens on every touch of the trade they enter, and they put a stop loss just below the trend line. So consider your entry at 1900. Your stop loss is just below that particular candle which has given the support, that is around 1850, and then they carry on till the trend line has not breached. So you would have been exited over here and re-enter when that went back up, and still the trend line has not come to touch. So this is the way of uh, taking a trend line. I can give you an example of Apollo Hospital, how people have exited in it, or one way of exiting the trade is like this. Now entry number one, two, three, four, five, six entries. And if you had entered at the right time at the bottom of say around 1600, you would have exited at 4,300 rupees. Now, I'm not saying all the trades give you rally like this, but I'm just giving you an example how what kind of possibility of taking a stop loss is. So every time you enter the trade, your stop loss is just below the trend line. This is one of the ways of exiting or taking a stop loss. There is one last way, and my one of the favorite one is that is known as taking your stop loss in the direction of your trade, that is trailing your stop loss. Now imagine that just consider that you have taken an entry at this breakout. Your first stop loss will be here, that is the swing low. Now when the stock is making an higher low, what happens? Stock goes up, comes down, and again goes up. As soon as it breaks this resistance, what you do, you just remove the stop loss and trail it over here. So what happens? At least your risk has gone down to no risk. Now at least minimum of this difference you will earn for sure. Now when the stock goes up, it again comes down, and when it breaks the new higher high, what do? You trail your stop loss here. Now the stock has gone up, again comes down, making a new higher high, and when it breaks the swing high, what do? You trail your stop loss to the new swing low. So what has happened from the gap of this, which was your loss, now is turning into consistent profit. Now, no matter what happens, you are in short profit. Now it goes up again up. What do? This is your stop loss area. You shift. Market goes up, down. You again, market breaks this high. You shift your stop loss again here. Now what happens? Since the market is not making any more swing highs, your stop loss remains intact till let's see what time. And you are exited in this area. So a stock bought at around 1500, you came out at 3800 rupees. So this is known as trailing your stop loss. The same can be done when you are into selling. See, consider you are in the selling of mm, Everready Industries. Why? Because it is into consistent selling, and let's look into that. So what happens is that consider you are in sell off of this area. The stop loss is this swing. Market went down, went a bit up and broke this low. So what you do? You trail your stop loss here. Market went down, went up, went again down, breaking this low. You again trail your stop loss from here to here. Again, after a few days, The stock came up, went down, break the low of it. Now here is your swing high. You will trail the stop loss here. Again the stock went down, came up here, broke this low. You trailed your soft stop loss to the next level. And then where was the stop loss taken? Let's see. Yes, the new low was never broken. So your stop loss is here only. And your stop loss was taken here. So consider a stock getting sold at 348 rupees. With the help of trailing stop loss, you exited at 95 rupees. So these are few of the ways that you can select at what position, what kind of trading strategy you use. You want to select your stop losses. Hope you had loved this video and very important topic. I would thank to the guy who asked me about the ways of putting the stop losses, and I have shared few of the stop loss. You can select any one of them, or you can come out with a new way as your trading style can be. I am more kind of a swing trader, so I love trailing stop losses more because it gives you very good swing in couple of months or something like that, and it let me stay in the trade for a longest time. So thank you very much and hope to get a positive response from you all. Bye.